What's up guys, Maro here. Now, the monetary authorities in our great Republic of Zimbabwe recently announced that they will be launching a new gold coin, which they say people will be able to buy this coin and use it as a store of value. And of course, the response has been quite mixed. See, when I first heard about this, when I first read about it, my first question was, why buy the coins? And then, if I buy the coins, where will I store them? Will I take them with me and drive them around in my car? When I park the car, take them down just like I do with all the money in my wallet? Or am I going to give them to a custodian bank to actually store these coins for me? But then of course, another question that was much more important and helping me figure out the first question was, what are the disadvantages and advantages of holding these coins compared to the asset classes that I already have in my portfolio, compared to say the US dollar? But also of course, I compared these coins to say the stocks and the shares that I hold on the Zimbabwe Stock Exchange. Now, don't get me wrong, there are many advantages of gold and gold coins by extension. You see, there are many advantages. There is the fact that 1 ounce of gold in Zimbabwe is actually 1 ounce of gold in Dubai. There's also the important, interesting thing that unlike money, if I have Zimbabwean dollars and I happen to just wake up in a weird dream in Australia, I might not be able to exchange those Zimbabwean dollars that I will have from my wallet into Australian dollars. But if I have 1 ounce of gold, when I get to Dubai, or when I get to Australia in this case, I can always ask them, how much of your money do I get for this gold? And they can always give me money and I can always give them gold. So that is another advantage of gold. The third advantage, of course, being the fact that gold has actually shown a sustained increase in its price. You know, from around the end of 2002, gold was just under $350. And up to now, gold is approaching $1,730 an ounce. But while I love and adore these advantages, of course, I have serious issues with gold as an asset class. Now, my first issue is that this is actually an expensive way for the general masses to hedge their wealth. You see, the average person in Zimbabwe doesn't earn a lot of money. The RBZ in its announcement announced that these coins are going to be 1 ounce per coin, 1 ounce of gold. That's what I say. And again, as we have seen in the chart before this, 1 ounce of gold is actually somewhere right around $1,730. Let's look at this from sort of a practical standpoint. You see, the average civil servant in Zimbabwe, they're earning their ZWO portion, which is the Zimbabwean dollar portion, but they also have something which the government has really touted over a long time, which is that they're giving them what is called a monthly allowance, a cushion. That's what the finance minister has called it. He has called it a cushion. And this cushion is $175 per month. Now, if you take the price of gold, which is at $1,730, and you divide by this $175, you will actually see that you will get to 9.88 months. That's how much the average civil servant would need to be able to actually buy just one coin. Do you understand what I'm saying? What I'm saying here is that it's much more likely that a civil servant will have twins or triplets in 9 months before they can afford one single coin. This is a little bit outrageous. I mean, it seems to me it's a way to hedge your wealth against inflation, yes, but it's definitely not for the masses. My second thing is gold actually doesn't produce anything. It just sits there and looks pretty. This is, it's fascinating. Gold just sits there and look pretty. Unlike shares of stock, which, if you buy a piece of a great business, at the end of every year, management will sit down and they will say, look, this is how much money we have made in this company. We are going to pay you dividends, which you can then use to buy more pieces of that business or more pieces of other businesses. You actually get a return on your investment. But when you buy this coin, you either are going to be walking around with it in the street, which you have a great risk of losing it or being robbed, or you're actually going to be keeping it to your bankers, who of course will not be paying you for keeping this coin for you. It's actually likely that they will request you that you pay them for keeping this coin for you. So as you can see here, there is the whole fact that gold doesn't actually produce anything for you. It just sits there and it looks pretty. My third issue is that, unfortunately, my trust with the officials at the RBZ is quite at what I would call an all-time low. Look, these are the guys who earlier on promised us that they were going to give us bond coins that we're just going to use for change's sake, because we did not have 25 and 10 and 50 cent US dollar coins in the economy. So they said, we are going to give you these coins that are going to be equal to the US dollar at par. They even put out some fancy, nice billboards to show us that they were serious about tackling the issue of change, that they were serious about just helping us divide our US dollars. That was before the bond coins became bond notes. And before we knew it, money was flooding the economy and the US dollar was being chased out. My issue number 4 happens to be something that is coming from, a past trauma. You see, there used to be a time at which you could buy Old Mutual shares in Zimbabwe. Old Mutual, for context for those who do not understand, this is actually a company that was once listed in Zimbabwe. It is still in Zimbabwe, in South Africa, and in the United Kingdom. It's listed on the Zimbabwe Stock Exchange, the Johannesburg Stock Exchange, and the London Stock Exchange. See, what you could do, technically, if you had your funds and they were stranded and they were in the country, is that most people started buying Old Mutual shares on the Zimbabwe Stock Exchange and going to offload them on the London Stock Exchange or on the Johannesburg Stock Exchange. As you can see, that was a very legal way to get your wealth out of the country. The RBZ in its announcement actually did say that you'll be allowed to take this gold coin and you can go and sell it in local markets or even international markets, which means there is a loophole here that if you have your wealth stuck in Zimbabwe, you could actually take these coins, buy them, and then go and sell them in Australia or in Japan where they can be melted. But then here is the issue. What happens then when the authorities realize that almost everyone will be trying to use this loophole to offshore their wealth out of the country? We saw what happened with Old Mutual. The officials realized that everyone was using this loophole to get funds out of the country. And what did they do? Essentially, they just barred Old Mutual shares from being bought in Zimbabwe and being sold. They put up a bunch of measures to make sure that people wouldn't easily do this. And so they are saying they want people to maintain the value of the Zimbabwean dollar by buying this coin and keeping the coin. But if they realize that people are buying the coin, taking the coin out and selling it offshore so that it can be melted, they might quickly get mad, just like they were mad in the Old Mutual issue. And then when that happens, they might still come back and say, you know what, we're cutting this thing off, and you know what, you can no longer sell this offshore. Now, here's my other issue that I have with this coin, which is the fact that I actually think the distributors, in the announcement, the RBZ did say that they were going to sell the coins and their subsidiaries and authorized banking distributors onshore and offshore were going to be allowed to sell this coin. But I bet you this, onshore, the people who will be selling these coins onshore, if you just consider a private banking institutions, I bet you they're not going to be selling these coins at the interbank rate. Here's the reason why. Because for a long time, the authorities have made us feel like if you have, excess Zimbabwean dollars and you wanted US dollars to use for whatever purpose that you wanted to use within the economy, well, maybe let's just say you wanted to buy milk, which is now being priced in US dollars, or, Mazoe Orange Crush, which we know now that is only being priced also in US dollars, and you can no longer buy just juice without having US dollars. So maybe you wanted to buy some juice or you wanted to buy some milk, and then you went to the bank and you said, look, at the interbank rate, here are my Zimbabwean dollars, I want US dollars. The bank would not give you that. They would not. They would just tell you we don't have it. Yes, it's there on our board that we might be buying Zimbabwean dollars, but unfortunately we have run out for the day. So now, what makes us think that it will be different with these coins? Banks are likely to say, okay, yeah, we have the coin, but we can sell it to you if you're giving us US dollars. But if you want to give us Zimbabwean dollars, we're sorry, we can't sell it. Well, they could sell it to you at the black market rate, but because they're a banking institution, then maybe it'll be very much difficult for them to say, yes, we'll sell it to you, but this is the price that we want to sell it to you at. So they will just say, if you have Zimbabwean dollars, sorry, we're not selling the coin to you. And if you have US dollars, yeah, you can join the line. In fact, just come into the office, sit with us. We'll give you some cookies, we'll give you some tea, and we'll make sure that we have a nice conversation before we take out your US dollars and we give you the shiny, nice looking gold coin, the Mosia Tunya coin. So there are going to be problems here because what people are really trying to do with this inflation thing is they are trying to convert their rapidly losing power Zimbabwean dollars and trying to get something that can store value, whether it's the US dollar, whether it's a share of stock on the listed stock exchange, or whether it's this coin that the government has been benevolent to give us. But either way, we're going to see a resistance here with private players in actually agreeing to sell this coin at the prevailing interbank rate. Now, there's also something that we really have to seriously consider here, which is the issue of robberies. I mean, this coin, as we have established, is worth something close to 1,730 US dollars. You'll be walking with this coin in the street. I bet you there'll be people with metal detectors just walking around trying to sniff if there is anyone with that gold coin. And believe me, you'll be robbed of this coin. Now, that is the scary out of the bank robbery. But the more I look at this, I discover that you can actually also be robbed of this coin if you actually have it within the bank. I mean, like, what if the bank that is storing these coins gets a directive from the central bank authorities that, you know what, you can no longer store 100% of your clients' coins, you now have to submit 95% of them, and you just keep 5 in your vaults. We'll keep them for you for safekeeping. Well, now, that's a little bit of a robbery. People experience that with the US dollars. They were told that the US dollars were in the bank until they were told that, well, you could literally see the figures of the US dollars. You know, they were still there, the figures, your bank account was reflecting it, but you could no longer get your US dollars out of the ATMs. This is exactly what got us to the situation where we are. You could no longer withdraw your US dollars that had been deposited into your bank account. And now, when you start looking at that, is that, you know, there's a risk that if you keep this with an asset manager, the asset manager might just be directed by the authorities to submit the coins back to the authorities, and maybe you will never find them again. Now, there's another risk here, which is very much specific to all the securities that are issued by governments compared to private players. Now, what I mean by this is, you know, when a government issues a security that it says it can help people store their wealth, there is also the possibility, however remote it might be, that they can recall that security and tell people that this is how you get reimbursed. What do I mean by this? You see, before 1933, the US used to have what was called the gold standard. In fact, what means with that is that you actually used to have every US dollar backed by gold. What that meant was, if you had a US dollar within your pocket, you could go into a bank, walk in, and you say, here's your piece of paper, I want the gold that's backing this, and you'll be given the gold. And some people, of course, believe it or not, prefer to keep their gold within their pockets and within their homes instead of keeping the paper currency. But in 1933, the US government, through a presidential executive order, ordered all their citizens to return the gold to their banks and make sure that they would be given what is now the fiat currency, the US dollar. So what this means is, we never know. You see, we never know. If the United States government, which is purported to be one of, you know, the most property rights respecting governments in the world, actually did this to their citizens when they decided they were getting off the gold standard and they wanted to issue a paper currency and tell their citizens to bring back all the gold, what about our guys at 80 Samora Machel Avenue? So, you see, this is the major issue that I have. You know, this applies equally, to be fair, to the US dollar and to the coins that are being issued by the authorities here in Zimbabwe, that we never know what the government actually decides to do over time. They can't just decide to say, give us our coins back and we'll reimburse you with this new reimagined purple or black Zimbabwean dollars that are bound to be the strongest currency within the region. Let me just say something here up front. As I have said, I am going to take a step back in the short to medium term to actually see what I am going to do, to actually see whether this asset class does in the end prove me wrong. Maybe I'm just an overzealous zealot of the Zimbabwe Stock Exchange. Maybe for a long time I have been invested so much in reading and understanding about the stock exchange that I think that's still the best way in the current environment for you to hedge your wealth. I could be proven wrong if the Zimbabwe Stock Exchange comes down crashing, or if the authorities decide again to close the stock market and I can't figure out a way to sell my shares, and maybe I'll die of hunger while I actually have shares locked up in a closed stock exchange. But you know, we never know. We never know. These are just my opinions. Do let me know in the comments below what you think of my opinions and whether you agree with me. And until next time.